Hello, fellow bankers. In this short presentation, I will be showing you that in the eyes of the law, you're a banker. And the proof that I have to show you this is absolutely undeniable. Before we get into it though, I would just ask that if you find this information helpful for you, then please support the channel by liking this video, sharing it with your banker buddies, and also do subscribe for more videos just like this one. Now, are you ready? Let's get into it. So to really grasp the information to come, you do need to first grasp what the business of banking is all about and what this actually means. The business of banking in a broad sense involves the following activities. So you have the safekeeping and receiving of money, the paying and collecting of checks, the activity of lending through extending loans and discounts, the issuance of promissory notes, the buying, selling, and exchanging of coin, bullion, and other securities, and the collection of commercial paper and the handling of special deposits. It is important just to note here that the carrying out of any one of these activities is actually enough to get you recognized as carrying out the business of banking in the eyes of the law. If you want more details on the business of banking and how it applies to you specifically, then we have covered this in loads more detail in the Are You a Banker 2-part mini-series. So you can check those out for all of the nitty-gritty stuff over there. Now, this is when things get really interesting. The first proof that I have for you comes from the one, the only, the Bank Charter Act of 1844. Section 28 is the interpretation clause, which literally reads, "The term banker shall extend and apply to all corporations, societies, partnerships, and persons, and every individual person carrying on the business of banking." It is important to note that the word all means the whole quantity of something. All means all, not just a few. So any sort of banking activity carried out by a legal person or a living man or woman through the use of their natural person, so their sole proprietor, any sort of banking activity carried out by these persons is recognized at law as a banker. But this isn't just it, there's more. The second proof comes from the Bills of Exchange Act of 1882. Section 2 has the interpretation of terms, and it literally reads, "Banker includes a body of persons, whether incorporated or not, who carry on the business of banking." And they added the definition of person towards the end for good measure as well, which we have covered at length in the Are You a Person series, which taught us that a person is either a legal person or a natural person, and that the natural person is a sole proprietor. So again, if you engage in a banking activity, as we have mentioned previously, my friend, at law, you are seen as a banker. If you have any question about how this actually applies to you, let me give you a very clear example. You use your natural person, or more accurately, your sole proprietor, to engage in the business of banking when you deposit money with any high street bank of your choice. How? Well, a deposit is actually a loan to the bank. You are extending credit to them. It becomes their property to do whatever they want with it, and you become a creditor, an unsecured creditor specifically, because you have no real claim to any of the assets of the bank should they actually fail to pay you back when you demand it. So this alone is enough to have you in the category of carrying out the business of banking. You may be surprised to know that a so-called deposit is actually a loan, but this is true and I have the proof. The proof comes from the Financial Services and Markets Act of 2000, and in brackets, Regulated Activities, Order 2001. Under Section 5, Paragraph 2, it reads, deposit means a sum of money paid on terms under which it will be repaid, with or without interest or premium, and either on demand or at a time or in circumstances agreed by or on behalf of the person making the payment and the person receiving it. So can you see how this is actually describing a loan? Just in case you do not see it fully yet, let's just read a definition of the word loan from LexisNexis, which should actually clarify this for you pretty well. This definition states that a loan is an advance of funds from one party, the creditor, to another party, the debtor, for a period of time. The funds can be advanced for an agreed period or be repayable upon demand. Interest is usually paid on the advance, which can be secured or unsecured. So you should be able to see very clearly now that a deposit is actually a loan. The only difference is that they decided to use a different word for it, but it means the exact same thing. To really solidify this for you even further, let me show you this case law which supports this. The case is of Foley v. Hill in 1848, and the judgment reads, the relation between a banker and customer who pays money into the bank is the ordinary relation of debtor and creditor, which is exactly what was mentioned before in the loan definition we previously looked at. Now, I do just want to note here something that's very key to remember. At the time that this case was heard and judgment was actually reached, the gold standard was very much in place. This impacts this case and its application in the present because at the time, it is true that it was only a debtor-creditor relationship because the representations of money at the time, so the banknotes, they were actually redeemable for gold, a physical and tangible asset. Nowadays, the currency and the banknotes have no redeemable asset backing it. So my proposal is that this case law is applicable to an asset-backed currency only. Nowadays, due to our debt-based currency, which cannot be redeemable for an asset, but rather for another liability, this means that the debtor-creditor relationship cannot logically apply any longer, which actually I have touched on this in a previous mini-series called The Truths You Haven't Been Told About Trust, which is a 3-part mini-series to be precise. So do check that one out to see exactly what I mean over there. So there you have it. You're a banker in the eyes of the law. And if you are a Harry Potter fan, I thought I'd throw in a little meme you may take fancy to because why not? And I must admit, when I was making this slide, I was in absolute bits laughing at this because it's just so funny to me. But anyway, yes, you're a banker, Harry. So in this short presentation, we have gone over the elements needed to be in the business of banking. We have looked at the definition of banker as per the Bank Charter Act and the Bills of Exchange Act. We have gone over how a deposit is actually a loan. We looked at the definition of loan. We also went briefly over a case law which proves that the relationship between a bank and its customer is a debtor-creditor relationship, or at least it was, more so when the currency was actually backed by a redeemable asset. So there you have it, all of the undeniable proof that you need to show you that the law does recognize you as a banker. If this video helped you in some way, then please consider leaving a like, sharing the video, and subscribing as well, as all the support is very much appreciated. I do hope to see you in the next one. So until then, bye bye.